I'm with Gary Reynolds, Chief Investment Officer at Courtiers, to find out what's been happening in the world of investment. Gary, hi.
Hi, Leo.
Tell us, a couple of weeks up to the seminar now, what's been happening since our last talk, and what do you think might happen and clients might expect when you get up on the stage?
Since our last talk, the markets have had a bit of recovery, which has been quite nice because it's not been the most productive years of returns for our investors. Some of them have said, they could have got more in a bank or building society, around 4.5%, 5%, and I think they're right. But it's beginning to change, and we've been saying for some time we know we're sitting on great value in the portfolios, really good stocks, strong balance sheets, cash generative. But until the market re-rates those companies, you get your dividend, but you don't get a lot more. So it's been nice that there's been a bit of a recovery, and of course, perhaps the big change recently is inflation has come tumbling down. Now, do you remember? I think you and I spoke a while back, and I'd said, where's the effect that when the government said they want to halve inflation this year, they were setting themselves a very low bar, because here we are now. Inflation crashing down for the UK into the mid 4.5s. The US, it's even more dramatic. They're down from about 9, just over 9 to just over 3. So this is really, really good news. And that, I think, is setting the tone for what's coming for the next decade.
Well, this was a question I was going to ask. Did I hear you recently saying that you're looking forward to a potentially exciting 10 years ahead with all the value stocks that you've been able to buy into recently?
Yeah, absolutely. It's been an unusual period. Post-global financial crisis, strange things happen. Knowing history is one thing. Living through it is something entirely different. So you go back to 1929. Look at the financial crisis of the time, the Wall Street crash, the terrible depression in the US. Look at the type of financial policy that was implemented. The world had to really lean on Keynes to find a solution out from where they were stuck with no GDP growth, no increasing in productivity. Post-World War II, Keynes again gets on it, and we have this period after the Second World War of great growth, relative peace. And then we hit the global financial crisis, and you've got the same distortions after that. But what politicians and central banks tend to do is to reach for the last solution that they know. So they say, oh, we've got a major problem. What worked last time? And I'll give you the best example. Pandemic comes along, 2020. Oof, we've shut down the economy. When was it really as bad as this previously? Let's have a think back. 2008, 2009, global financial crisis. Throw QE at it. Buy loads of bonds. So in that year, the Bank of England doubled down on bond buying. They bought more bonds in the year after the pandemic than they had done between 2009 and 2020 when QE came in for the first time to alleviate the effects of the global financial crisis. And sure as night follows day, inflation followed massive QE, and it was the first mistake. Now, why am I looking forward to the next 10 years? Because I think some lessons have been learned. I think interest rates have normalised. I think this nonsense of austerity is going to be parked to one side. That is, as long as the new Thatcherites, who for my book are not Thatcherites at all in the Tory party, get their way with austerity. And I think you're going to see a bit of a purple patch in the world economy, and that's very exciting.
Thank you, Gary. I want to change subject now to a recent acquisition. Courtiers acquired Brunswick Investment Management, the 15th acquisition since 2008, I think. This expands our presence across the UK to 5 regions. What does it mean for our clients today? What does it mean for Brunswick clients?
Well, I think all of the acquisitions that we've that we've made, and this is very much Jamie's area within the business. He goes looking for companies that we can acquire, that we can add value to their proposition to their own clients, and which companies will integrate well. So, if anybody's watching this, if you look at our list of senior managers on our website, a lot of those senior managers have come from companies we've acquired. So they've got on well in Courtiers and moved forward. So the fit's got to be both ways. And Brunswick is a lovely business. When Jamie first introduced me to Lewis, I thought, I really hope we get these guys, because I like them. And having met the investment team there, which is obviously the side that is most interesting to us, and the Jake's working with the guys there, I think it's a lovely match. They do things in a very similar way. Perhaps we use rather more modern tools than Brunswick have used with their asset management, but they've got a very, very risk-orientated focus. So I'm hoping that we'll get to meet a lot of the Brunswick investors, and we're extremely excited about welcoming them on board. I think the other interesting thing, if from a Courtiers business perspective, as Jamie mentioned, there's a lot of companies out there that are backed by private equity, and they're hungry, and they go around scooping up every little business that comes up. And it's no secret that financial services is going through a consolidation period. There's probably too many firms in the financial sector, and you need scales of economies and make things worthwhile. But what we are is a family business. So with that's going to continue to be a family business, and that means we're slightly different as an acquirer to some of the other big names. So it's great. And they're super nice people. So I think everyone at Courtiers is looking forward to working with them.
Excellent. So growing business, bigger business, exciting decade ahead we're looking forward to, changes on the landscapes.
Yeah, there's great opportunities for us as a business to go on doing what we do well. It's no secret this has been a difficult year, Leo, on the investment side. I'm not saying it's been anything but that. But despite this difficult year, we still shoot the lights out over 10 years. And these are the long time horizons of our investors. We've got some people here that have been investing with us for over 35 years. And they stayed with us for a reason. We're pretty good at what we do. It's just that I can't predict the day-to-day movements of the market. But I do know if we buy value and we stick by our guns and we diversify, then generally in the long run you get it right. And Warren Buffett is a great example of that. He's in his 90s now, made tens of billions of dollars as a very successful investor. And if you've got a great example out there of how to do it properly, just follow. And yeah, we got our nuances and our differences to the way that Berkshire Hathaway do things. They're a more hands-on bar of subsidiaries. We're a different type of business, but you try and use the same principles.
Gary, thank you for the insight. Looking forward very much to seeing you up on the stage along with the rest of the investment team at the client seminar next month. This will be the last chance we get to catch up, but I'll hope to catch you before 2024 joins us and see what you might be thinking after the seminars.
Brilliant. Thanks, Leo.
Thank you, Gary.